So just so we can make the most of our time together, how many people are fairly new to the supply-demand strategy? Been going over the strategy for many years here at FX Street. Created it over 20 years ago on the trading floor of the Chicago Mercantile Exchange. But just want to make sure I know, at what level to speak at. And I'm here for you, so just want to know, how many people are brand new to it. And it doesn't look like, looks like everyone's got some experience with it. Okay. All right, so we'll make the most of our time together today. We're going to go over we usually in these sessions, we go over a concept related to the strategy, and then we dive into the live markets and focus on applying and executing. If you want more information, then we're able to go over here due to time and everything else. You can always come to one of the workshops. The workshops actually have changed. We now go over some of the rules of the strategy inside the workshop. And those are free. So there you go. I can actually post the link in the chat if you like. I know that makes it easier. There you go. There's that link if you like. All right. Again, good to see everybody. So let's get started. Let's dive in. So first thing I want to go over is this. So let's look at, all of these are from our, I do a live session every morning for our members. And I want to go over a number of opportunities from myself and the team from yesterday. And I want to focus on two things. How we use certain correlated markets to help us make decisions. And we've gone over that here in these FX Street sessions with the dollar and all that. But there's a little more to it that I want to just go over here. And then I also want to focus on profit zone. So we'll see that on the next screenshot here. And then we'll dive into the live markets. Like I said, I developed a strategy over 20 years ago on the trading floor of the Chicago Mercantile Exchange. I was fortunate enough to be on a pretty big trade desk at the time, facilitating institutional order flow. So understanding exactly how and why price moves in markets and turns in markets was crystal clear. It's all about supply and demand. Given that was in the late 90s, and things were transitioning to screen-based trading, the timing was kind of perfect. I didn't plan that, of course, but the timing happened to be perfect, and I just brought price charts over to the trade desk and wrapped lines around the price levels in markets where those big pockets of supply and demand were. And sure enough, price would turn at those levels and simply move to the next level. Does that make sense? I know I've talked about that before, and most of you have heard that story. That's just why I'm kind of just really summarizing. But the most important thing is, nothing has changed since back then. The markets have always moved because of, supply and demand. What we focus on are two things and two things only: structure and location. Ultimately, supply and demand is everywhere on a price chart, right? Really follow me here, and you can be as interactive in the chat as you want. A lot of people say, oh, there's supply, or where's demand, or where's that one picture that represents demand or supply, and now let's go take all these. Well, that's not how this works, because, again, supply and demand is everywhere, isn't it? Right? Every time you have a trade in any market, stocks, futures, forex, options, it's because a willing buyer and a willing seller have agreed on a price, right? In any market, every time price moves up or down, even a minimal price point, it's because of a supply-demand imbalance, right? Isn't it? So you have supply and demand all over the place. We have supply-demand imbalances all over the place. What our goal is to help answer the two questions, where will price turn and where will it go? Our goal is to use very simple rules, two rules, to help us identify the significant supply and demand imbalances, which is where price is most likely to turn, right? And then other price levels where we have lots of supply and demand, keyword there, and that means we have a lack of a significant imbalance, and those price points or ranges facilitate price movement. Does all that make sense to everybody? Again, I always try to keep it as simple as possible. And a lot of people, you know, look, we're humans, right? We overcomplicate everything. So this is something you definitely don't want to overcomplicate. Coming into yesterday, this is early in the morning, as you can see here. Price was just coming down into our demand zone in a major bond market. This is FGBL. This is the German Bund. Okay. So given that price was coming into demand in a major bond market, and this wasn't the only one. This is a screenshot from the morning session yesterday. And, for example, the NASDAQ was nearing our supply zone, came within, I don't know, about 8 points of our supply zone, and FESX was into a supply zone. We'll see that in a few minutes. And I believe we went over that last session in FX Street here. Given that, we were focused in the early going yesterday on if we were going to do any active trading positions, right, we were going to focus on shorting opportunities in the equity index markets. That's what the objective supply and demand evidence told us. We'll see how all that played out here. Obviously, the bond markets rallied strong off these demand zones a little bit later in the session, supporting the bearish equities tone, at least in the early going, until we fill those profit zones. So looking at the active trading sessions yesterday, so my sessions kick off the day every day, and my sessions are designed to focus on where the major markets around the world are likely to turn and likely to go from a swing trading or bigger picture perspective. But with that always helps guide our active trading decisions. After my sessions are over, about 15 minutes later, our exchange day trading sessions start. And you can see here, given the landscape, the supply-demand landscape going into yesterday morning, like I just shared with you, okay, Brandon Tristan, one of our fantastic members, leaders here in the sessions, found a nice supply zone in the Russell. Okay, it's right up here. Price ultimately rallied up to that level and fell right down through the profit zone. Okay. Now, what I want to show you is we had the same setup in the S&P. Okay, that trading opportunity worked out fine for our members. And then we also had the same opportunity in the Dow. This is all yesterday, and they all worked out fine. But how many times do you come into an opportunity and think to yourself, wait a second, which one should I take? In other words, maybe the dollar is into supply and you have the euro, the pound, maybe the Swiss into demand. And which one should I take? Which one has the highest probability of being successful? Which one has the biggest profit zone? Those are the two questions we want to answer. So now watch the difference. Try to follow me here. So notice in the Russell opportunity, notice the distance down to the nearest area where the market is suggesting there's a nice supply-demand imbalance on the demand side. Here's the origin of the last strong rally in price. Notice how far our supply zone is from that demand. Obviously, price moved right through the profit zone there, as it should. Okay. But let's take this a little bit deeper. Okay. When it comes to objective supply and demand, notice, you see, to really understand this and own the knowledge, to develop the skill set, you need to understand the order flow, the supply and demand order flow that's going on behind the scenes that's really responsible for the creation of the candles that we see on the chart. So many people just look at a red or green candle and a formation of something and boom, that's it. They never get to that one level deeper, and that's where all the answers are. So follow me here. The fact that price moved up so quickly and so easily here, we know that that only happened because of a lack of significant supply, right? Okay. So if there was not significant supply on the way up, that means the market didn't need a lot of demand for price to move higher like this. And often when you see these big price moves, they're not accompanied by heavy volume. You don't need it. Okay? So the fact that there wasn't significant supply in the way up means you didn't need a ton of demand for this to happen. If you didn't need a ton of demand for this to happen, that means there's not much to stop price from falling back through the profit zone, at least until down to here. Does that make sense? Okay. So that was pretty clear in the Russell, given the location and structure of that opportunity. Now, look at how different the S&P looked right around that same time, that same opportunity in the S&P. Notice here on the left for the live setup in the session, yes, we had a similar supply zone here, but you had a couple levels of, now we wouldn't call this demand, and even that, that area of demand in the Russell is not a demand zone we would necessarily buy at, but for a profit target, it works fine. So we've got our areas here, and then we've got our demand zone, much lower. But notice this is much closer to the level than it was in the Russell. Does everybody see the difference? Make sure you see the difference. Now, the S&P worked out fine. It didn't give you as much of a risk-reward opportunity as the Russell, and that's the point there, to properly assess probability and profit zone. Now, let's look at that same opportunity in the Dow. Jasmine found, this isn't exactly the same, well, similar. This is all yesterday. So she found in the Dow, notice the difference. We're going to add one thing to this here for your supply and demand knowledge. Notice the distance between the supply zone, okay, and well, we don't even see demand on the chart at this moment. But here's a big difference, okay? At the time when the Russell was meeting entry, price had not been down to the origin of that rally yet. Right? It came down after the shorting opportunity met entry. Here in the Dow, price had already come down to this area, filled most, if not all, of the buy orders down here, well, most, prior to price coming up and meeting the entry point. Furthermore, here's another difference, a subtle difference. Again, same logic holds true here. The fact that price went up so easily here tells us there can't be significant supply on the way up, which means we therefore then didn't need much demand for this to happen. If you didn't need much demand for this to happen, that means price should have an easy time falling back through that profit zone because there's not much demand in here, and that's exactly what happened. And if you didn't need, which means you didn't need a lot of supply for this to happen. And if you didn't need a lot of supply for this to happen because of that, you certainly don't need a lot of demand for price to go back up again, which increases the probability of price moving down through this level after the short entry would meet entry. Does that make sense? So let me summarize. Where in this Russell, and this could be anything, we could be talking about Forex markets or what have you, it doesn't matter. Where in these other two markets, okay, you had been up through this area once, twice, not twice, just once, and then price came down and met entry. The S&P, you went up through a tiny area, down here, then it meets entry. In the Dow, right, we went up, then down through that same area, then up through that same area for a third time, and that's when this trading opportunity met entry. So that's why out of all three, the Dow would have been the highest probability with the biggest profit zone. Now again, they all worked out fine, but I wanted to show you the subtle difference between the three. And the information we're talking about here is certainly not just for the equity index markets. We apply all of this information equally across any market, any time frame, any financial purpose. Make sense? All right, let's move forward. So let's dive into the live markets. Now, we can look at any market you want to. I have a list here that I can go through, and I was going to start with the dollar, but we can certainly look at any. So if you have any you want me to look at, just go ahead and type it in the chat. All right. Let me just read back in the chat here. Yep, we can look at those markets. Yeah, and remember, when you look at, so, you know, David, when, I can probably just add something to that. Yeah, we'll certainly look at the Aussie dollar. Let's start with the US dollar, and then we'll take our cue from there and go to these other markets, no problem. But David, one thing you might want to add to that is at the levels themselves, the supply and demand zones, remember the levels that have typically the least amount of trading activity and below average volume are going to be better, higher probability than levels that have lots of trading activity and above average volume in them, right? I know it sounds backwards, but if you think the logic through, you know, you'll get it. Right? Because at, you know, the greater the supply demand imbalance at an area, the less actual trading activity you're going to get at a level, right? At that price point, you have the highest potential volume. You just don't get that volume because all that volume's on one side of the market or the other, like those supply zones there. Okay? It's kind of counterintuitive, but if you think the logic through, it'll make sense. Right? Okay, let's begin with the dollar, and then we'll go over to your spot Aussie. So in the U.S. dollar, we're really focused on two areas at the moment. First, let's go to the 60-minute, and you know we can really see both these levels on the 60. So right now, the dollar's in the middle. Now, all of these markets, any market on the planet, spends most of its time in the middle. That's how supply and demand works. Competition to buy and sell at our key supply and demand levels forces price back to the middle. So I believe overnight, I'd have to check on that, but I believe that's overnight, but 92.60 up to about 92.70, we've got a gray supply zone there. So remember, we have gray supply and demand zones and yellow supply and demand zones. The yellow levels are great location, great structure. The gray levels are typically poor location, but good structure. And we certainly don't take every supply-demand zone that meets the pattern definition. In fact, we take very few, right? We want to stay away from the middle, stay out of the novice space. Okay, so we've got this 92.60-ish area on the upside. So if the dollar gets up into here, we'd be looking for the dollar to make another move lower because we have some secondary evidence here already. And at the same time, we'd probably be looking for demand zones in some of the FX markets against the dollar. Okay, on the downside, we'd be looking around the 92.10 area. I can scroll back and show you that. Let's get another gray level, 92.10 down to about 92. And this is all best seen on the 60-minute chart. There we also have some secondary evidence that you're likely to have a pretty good supply-demand imbalance down there. Now, one thing with this demand zone, even though we do expect prices to bounce higher here, that rally may be short-lived. The reason I'm saying that is because as we get to other FX markets against the dollar, you're going to see a lot of them don't have key supply zones, when the dollar's down here. That's rarely the case, but this time we need to be a little careful with that. Not that surprised, though, when we're looking at a gray zone. If that demand zone down here was yellow, we would certainly have many shorting opportunities in FX markets against the dollar. Asan, no, not at all. The only added thing you need to do when looking at those smaller time frames is make sure you know where you're at in the bigger picture for location. And that's why all those active trades that I just showed you, those opportunities from yesterday, were to the short side in the early going because of where the bonds were in the bigger picture and where that NASDAQ was in the bigger picture. So we're able to take that, objective supply-demand evidence and make those decisions on smaller time frames, right? Because here's the other side of that. All those shorting opportunities I showed you yesterday, there were also demand zones not far away, and had you taken any of those would not have worked out. But the market was telling us don't focus on those because of these larger time frame location of some of these markets and the inverse markets. It may sound like a tricky puzzle to put together, but it's really not. It only is if a lot of people are focused on all kinds of strategies, even supply and demand, right? Years ago, there wasn't anyone else talking about supply and demand. Now everybody's got a supply demand strategy and a different version of it and all that stuff. So people, people have really complicated the strategy over the years. So there's our kind of key location in the US dollar. Let's now go to the Aussie dollar. Okay. Let's keep going here. All right, looking at Aussie dollar. So, the last time we were together, we were very focused on this supply zone up here. Is anybody short Aussie dollar from our level up here? We've really just been focused on this level a lot for two reasons, both the dollar and just the Aussie dollar itself. The other area, this, big picture. All right, David, well done there. The other thing is big picture. You need to know where the Aussie dollar is at location-wise. And this is a weekly chart, so we're not super close to this level, but sitting above, you've got supply here that price just keeps touching and falling from. So for the foreseeable future, we're still interested in using this level, right? All it's doing is proving itself out over and over and over. Okay, so you got to be really careful buying the Aussie dollar anywhere near this area. If anything, look for supply zones to short against. Okay. Let me go to the Aussie dollar futures real quick. I think I have one or two things to show you here. And we will start with, let me see if there's something on this. I thought I had something here. Oh, you know what? They're much lower. Never mind. So you do have a couple demand zones sitting way below all this novice space here. We're looking at the Aussie dollar futures here. So you'll see these same levels in the spot. These come in around 71.23. All right, let's keep going. And let's go to the dollar yen. And we will start with this chart over here in the corner. Actually, no, let's go to the 60. So let's start right here. So we've gone over these supply zones on the daily chart in the yen, and after falling from those levels with plenty of room below, because remember these pivots are not demand zones, we've gone over that. We now have more supply zones above. Now this one's pretty far from current price, but it is what it is. That's where it's at, 105.25. But we are moving through look, I remember we just went over what this picture represents in that Russell, S&P, and Dow example. It's the same thing here in the yen, just bigger time frame, but the same concept. So down below that, near the origin of that rally, we have two gray demand zones. This is dollar yen on the 60, 103.75 down to 103.65, and then another one below that, 103.55 down to 103.45. Okay. Next, so there's your supply-demand scenario in the yen, and notice we're using multiple time frames to identify those. Let's go to the euro here, and I'll mix it up. We'll look at spot, we'll look at futures. We can certainly go to gold. So with the euro, let's go to, yeah, see the euro's a challenge because it traded nicely off our demand zone, but given where the dollar is, there's really not much that's close in the euro. I can show you this time frame over here. This kind of sums it all up. Clear novice space. We could take positions inside here on much smaller time frames, but committing to one side or the other in here is just not a good idea. Our rules tell us not to look for trading opportunities in the novice space. Sitting above and below that, we have fantastic levels, but we've got those same levels in the dollar. All right. Moving down to gold. I see some people want to look at gold. Gold's been, so we cover gold every day. It's one of the markets we look at all the time. And gold has really just been trading off of our, the gallery is one of the services we have. So it's been trading off of our area of supply up here. We have an algorithm, a supply demand algorithm we use also. So that's where some of these levels come from. So there's that one. We would not use that one again though. Look, in gold, if you want to focus on the high probability opportunities, gold is also trading nicely. We had our 60-minute supply against 60-minute demand. But again, all these levels you can see are used up. If you want to keep it high probability, you're better off focusing possibly on the daily chart and waiting for the 1816 area. That's where we have 2 or 3 demand zones stacked on top of each other. But we need to get down there first, obviously. On the supply side, there's not a whole lot close to current price, right? Once you get on the 60, let's see. Yeah, I mean, we just don't, right? We've got our demand below. There's more demand. 1842 is a decent demand zone we would look at also. And then below that are those daily demand zones. But look at all of this sideways trading activity. The presence of all of this trading activity in here, especially the wide and whippiness of it, tells us that there's not likely to be a significant supply-demand imbalance inside that. If there was, the picture wouldn't look like this, would it? You'd see very little trading and the price would shoot away and not come back. All right, so we don't want to look for opportunities inside the novice space. We want to be buyers below, sellers above. Okay. All right, so that's gold. The market that really tipped us off to at least bearish equity index markets for a little bit, and it's these markets are moving up now, is FESX. So take a look. When you look left, we've got 3 yellow supply zones sitting on top of each other, really stacked on top of each other. Okay. So this one just met entry 2 days ago, or yesterday. I'm sorry, yesterday. And you can see we're just kind of drifting lower at the moment. All right. Let's go over to the NASDAQ for a moment I wanted to see, we're getting a little bit of rally in the inequities. So I wanted to see how far we were from this. So we've got a gray supply zone here, meaning half risk. On our yellow zones, we go full position size, full risk. And look, if you just never short equity index markets or stock markets, that's fine too. That's probably a great plan. I mean, in the bigger picture, we always have a bull from fresh, larger time frame demand zones. That's always our outlook for stocks, for the equities. Okay, yeah, let's get back. We can certainly get back to some in some of these. So let's do a quick look at the larger time frame, right? So we can see just real quick in like 2 seconds, we can see we're at the origin of a drop, and the bottom is we have all these pivot lows against this demand zone. So there's room, right? We wouldn't expect price to go through this demand zone next time. We would still expect another bounce because prices just touch this level and turn higher. But there's still room down to that level. Therefore, we can go to some smaller time frames and see if we see what we can find here. One thing I want to point out, though, take a look at that supply zone. This has been my point kind of all along. See how perfect that looks? But it didn't work. Why? Someone tell me why that didn't work. I mean, we would never take this as a supply zone, but I know a lot of people would. Why isn't that level likely to work? I mean, the chart is telling us for a fact that when price was at the level, supply exceeded demand. We know that. That's the only reason why price can fall. That's a fact, right? But when it came back, how come it didn't turn lower here? Why did it just keep going? Yeah, location. Exactly, Michael. Poor location. Supply, demand, novice space. Price will spend at least 90% of its time somewhere in the middle, somewhere in the novice space. Okay, this level is clearly in the middle, and we see that by looking to the left. So this would never qualify for us. Structure-wise, it looks great. Location, it's right in the middle. All right, enough of that. Let's go find an opportunity here. Okay. Oh, that's a pretty small time frame. Let's start here. So to find our key levels, we want to go. We never want to cut through candles. You never want to be cutting through candles. We don't have any yellow supply zones up here, or at least not in these kind of mid-range time frames. We do have an interesting area up here. Let me go look at that on a smaller time frame. What is that again? 90, about 90.35. Let's go look at that. That's going to be up here. And you already have so many pullbacks to it. That's the challenge. One more here. You see how, when we look to the left, this is really an area of, this would be a gray level for us. This qualifies a gray level, but certainly not yellow. So we can get a little bit higher. The meat of that is right up there around 32. And so that's going to default to yellow, but let's make it what it needs to be. That's gray. Okay. All right. So there's a level 90.32 up to about 90.41. Notice all the novice space we now have below. The challenge is, though, you don't want to see too much of that to the left, and that's what makes it gray. For the next one, let's look at, looks like Canadian Swiss, Euro dollar, just looking back in the chat. Why don't we go over to, let's go over here for a moment. So to speed things up a little bit, why don't we use, so this is our supply and demand algorithm. I want to go to, let's go to Forex though. There we go. Okay. So this will help us speed up our analysis given we don't have a ton of time together. So we can look at some of these. In fact, we can look at some of the ones that you're asking about. Okay. So here, the automated supply demand tool is suggesting that in the euro yen, we are likely to have a significant amount of demand right around the 122.90 area down here. Okay. And then on the supply side, we'd have to look on it. We'd look on a different time frame. Let's just run through these and find some opportunities. Let's see. I think someone else was looking for. Let's see. That's the euro yen. Here's the euro dollar. Let's see if we're getting anything in the bigger time frames. I have another workspace here that gives us tons of opportunities in the smaller time frames. Ooh, looks like we just missed this one. However, the pullback was so shallow, we can look to take this one again, and this one's not too far below. So this one looks like it comes in around 118.43, 118.43. Again, the fact that price just touched this level and took off suggests there's a significant supply-demand imbalance here. Okay. And then here's a larger time frame level that's just a little bit lower. All right, and that is the euro dollar. This one certainly looks like, at least with the initial profit zone, it's offering at least a 3-to-1 opportunity, you know, if not more. Okay. Let's go look at, I think we looked at the, didn't we look at the dollar yen already? I think we did. Okay. So that was a nice one, but we would not take that one again. See how deep price went into the level here? So if price comes back up to that level, we would not want to take that again. That chart is suggesting that most, if not all of the key sell orders there are filled. However, there's another level sitting here right around 104.48 on the supply side there. So that's not too far from current price. Okay. And let's go to a couple more here. I'm just going to click through some of these real quick. That's a nice thing about having the automated supply demand tool. It just really speeds everything up. Let's keep going. So lot going on here in the Aussie dollar. So I believe we looked at the Aussie dollar spot. We looked at the futures also. Well, I'm not sure if we did, but we looked at so many markets. Might want to watch the 73.16 area. Up in here, but be careful because there's a limited profit zone down to about 72.70. So you've got some supply here against some demand here. These would both be, especially this one would be a gray zone, this level right here. So just be careful of that. Okay. All right. And so let me go back here for a moment. So I know some of you may have come late to the session. Alexander, I can, oh, there we go. So I just put the link in the chat. I tried to go over as much as possible today with, some lesson around a concept, at the heart of what we do, profit zone and probability. Hopefully you saw the difference there. We covered a bunch of live markets, and some of those positions we went over last time are working out fine. We've got some new stuff that we found today. There's a link if you want more information, want to focus more on specific rules and challenges and stuff like that. You can always come to the workshop. They're free. Some of these fill up, but I think there's but there they are. There's the upcoming ones. And with that, hopefully that was helpful. If you have any questions, you can always ask in these workshops. I attend some of them. I don't attend all of them. We've got really good supply-demand people that deliver these also. So, yes. So there are tools, Ethan, but I don't know that you. Oh, I see your chat there. Yeah, just reach out. Shoot an email. We can chat about that. Okay. All right, everyone. Well, hopefully that was helpful, and we will see you next time in the sessions. And again, if you have any questions, don't be afraid to ask. All right. Have a great rest of your week, and yeah, we'll see you next time.